Jeff Bezos is the richest man in the world, worth $120 billion. But surprisingly, his annual salary is only about $82,000 a year. So what makes him the wealthiest man in the world? Net worth. Majority of his wealth comes from the shares that he owns in the company that he built from the ground up, Amazon. Sometimes we get so fixated on the dollar amount we make from our jobs, and we're chasing the next better paying job, the highest paying salary, when in reality it's not your hourly wage or your annual salary that determines your wealth, but it's the way that you invest and save the time and money that you have. We're not looking to be the richest couple in the world, but we still track our net worth every month so that we can see how we're progressing financially. In this video, we're going to explain how to calculate net worth and provide some tips and tools, and at the end, a step-by-step tutorial on how you can track your net worth too. Hi guys, I'm Tassine.
And I'm John. Welcome to Millennial Fire, where we give you guys practical tips on reaching financial independence and early retirement. And if you've been enjoying our content so far, please smash that like button for us because it really helps us out. And also hit the subscribe button so you can stay up to date whenever we release a new video.
So in order to understand how to calculate your net worth, you have to understand what net worth is. Think of net worth as a progress report of how you're doing financially. And it's a simple equation of your assets minus your liabilities, also known as your debts. And that will give you a number that's either positive or negative. And this will be the number that is your net worth. So we have to understand what assets and debts are in order to be able to calculate this number. So I'm sure most people know what debts are. We probably all have experience with debts, either with a student loan or a car loan or credit card debt. Anything you owe to anybody is considered a debt.
Yep, that $20 you owe to your cousin from 2 months ago, that's a debt.
Definitely a debt. And so now that we got that out of the way, we'll talk about what assets are. So assets come into two categories. They'll either be liquid or non-liquid. Liquid assets include anything that you can easily access within a few days for purchasing power. So this could be money that's in your checkings account or your savings account, money that's under your bed, money that's in a brokerage account, in stocks or bonds that you can easily access. These are all forms of liquid assets. Non-liquid assets are things that you can't easily tap into for purchasing power, such as a house, a car, a boat, a retirement account, a CD, anything that you're not able to quickly access within a few days. Those would be considered non-liquid assets.
So when you go and ask people what an asset is, you're going to get a ton of different answers. You're going to get people that says that the bed that you sleep on and the dresser that you put your clothes in could be considered an asset because you can sell it. But we like to be a little bit more strict when calculating our assets. The reason being is because we believe that if we never intended to sell the item, then it's not a part of our net worth. So one of the big topics that come into this are houses. So as you guys know, there are tons of ways to invest in houses, but not every single house is an investment. Some people buy houses to live in as a primary residence without the intent to ever sell it or to turn it into a rental property or to utilize the equity that's inside of the house. In that case, we wouldn't consider that an asset because it doesn't help our net worth grow. So let's say I buy a house at $200,000 and now it's valued at $300,000. This is great if I intend to either sell the house or use the equity inside the house to make other investments. But if I don't ever intend to sell, that extra $100,000 of value of the house never benefits my net worth. So for us personally, we never include a primary residence that we never intend to sell in our net worth.
But for us, every property is up for investment. So every property of ours is included in our net worth as of right now.
And one more thing is that this isn't a steadfast rule. Like we said, there are plenty of different opinions out there. If you choose to do so for yourself, go ahead and include it. But the important thing is that as you're tracking your net worth across the weeks, the months, and the years, is that you stay consistent with what you include and what you don't include in your net worth. Or you're going to see numbers all over the place, and then your report card, your progress report is going to be messed up. So let's look at a quick scenario of how someone could calculate the net worth. So in this example, let's say that this person has a house that's worth $200,000 and they also have a retirement account that's valued at $50,000. These, remember, are two non-liquid assets. And on the liquid asset side, they have a savings account that has $25,000 and then they have a checkings account that has $25,000. So with this all together, their assets are valued at $300,000. So let's go look at the other side of the equation, and that's the debt. This person owes $100,000 on their house for the mortgage, and then they also have a car that has a $10,000 car loan on it, and then they have $40,000 in student loans. So this brings the debts up to a total of $150,000. So we're going to take the $300,000 in assets minus the $150,000 in debt, and this person has a net worth of $150,000. So we look at this net worth, and this looks like a great net worth to have, $150,000 in the positive. But remember what we said, that your net worth could also be a negative number. And there's nothing wrong with this. Actually, when most people start their adult lives, they start with a negative net worth. When I graduated college, my net worth was automatically a negative $36,000, not including the ring to buy for my fiance that I put on the credit card as well.
Which I had no idea.
So with that, don't get discouraged if you have a negative net worth, because your goal is to get to zero. Get to the point where your debts and your assets equal zero, and that's a huge milestone that a lot of people never make it to. And then after that, worry about getting to $50,000, $100,000, $1 million. Don't get discouraged with the negative net worth.
So what's the best way to calculate your net worth? It all depends on the type of person you are. If you're the type of person that likes to be more hands-off, there's many sites out there that can passively track your net worth for you. Personal Capital and NerdWallet are two of the ones that we know of, and you're able to link your bank accounts and all of your different accounts, and it can passively just update your net worth as time goes on. If you're more of a hands-on person, there's a printout that we'll also include in the description from Charles Schwab, where you're able to print out a sheet and there's different categories, and you can just write the numbers in and manually calculate your net worth that way. If you're even want to be more hands-on than that, just a regular sheet of paper where you list your assets and liabilities and do the calculations that way, you already have the equation, so you can definitely do it that way. Just make sure it's a notebook that you can keep track of.
Our preferred way of tracking net worth is through a custom Google sheet that we've made for ourselves that we want to share with you guys. The link for it will be in the description below, and here's a quick tutorial on how it works. Hey guys, so this is just a quick tutorial of how our net worth calculator works. So a few things to notice. If you look at the very bottom, you're going to see 4 different tabs. You're going to see liquid assets, non-liquid assets, debt, and net worth history. So we're going to start on the first tab, and we already have an example in. And all you simply have to do here is come in, put in the source of whatever this asset is. So let's say we have a Wells Fargo bank account, and then we put in the amount of money we have in it. Let's say we have $100, and we can add in one more account, a Bank of America account. And let's say we have $50 there. And then we see that this field is automatically going to update, so you never have to touch anything on this side. It's automatically going to update for you. One other thing to note is that we have a section here called notes. You're going to see this on every single tab. I love to have this here just in case something happens. So let's say that typically our Bank of America account is $50, but for some reason this month it's $250. I will come in and put in the note. The next time I come in here, I'll know that, oh, my bank account was higher than usual due to me receiving the cash Christmas gift, and I can move forward and know what's going on with my account. So remember, this is the liquid assets page. So this is assets that can easily be converted into cash. So this includes bank accounts, stocks that are in brokerage accounts, and things that can be converted to cash without a lot of time and without additional fees and things like that. The next tab that you're going to see is called non-liquid assets. And if you remember, a non-liquid asset is something that's difficult to turn into cash, whether that's because of time or excessive fees to do so. So this includes things like having a house. Even though you can have value into the house, it takes quite a bit of work to turn it back into cash. Another example are retirement accounts. If you're under 59 and a half, to withdraw money from your retirement accounts can hit you with tremendous fees. So those will also be considered non-liquid assets. So place all your non-liquid assets into this page. So let's say we have a 401k and our 401k is currently worth $1,000. And let's say that we also have a house. So we have a house. What we're going to do here in the case of a house, we're going to go to Zillow and look at the value of the property. So let's say we have a house that Zillow has an estimate that says it's worth $200,000. And in our notes, once again, we can put what we base this on. And so here you see that this field, once again, auto updates. And so we have $201,000 in non-liquid assets. So now that we've covered the non-liquid assets page, we're going to go to the debt page. So debt includes anything that you owe money on. So it could be a car loan, it could be a credit card, it could be student loans. So let's drop in a few examples here. So let's say that we owe $5,000 on a car. We have $200 due on our credit card. And let's say we have $1,000 due in student loans. So we have this field that auto updates again here, and we see that we have $6,200 in debt. So what we're going to do now is go to the net worth history page. On this page is where you're going to come in monthly, once a month. For us, it's the 25th of each month. It doesn't have to be the 25th for you. It could be the 1st for you. Just choose whichever day of the month is best for you and your financial situation. So I would come here and I will put in the month and the year that it is. And so we'll say July 2020. We will put in the total assets. And so I would come over, look at my current assets and type in the total assets, 350. And then the total liabilities, 6,200. And then the current net worth, which is 195,150. So once we do that, then we see that we have something called the rate of gain of loss. So what this field indicates is how much your net worth has increased or how much your net worth has dropped since the previous month. Since we don't have a previous month in this case, you see that it says 0. But let's go and jump over to August and let's go add a few numbers just to see what that looks like. So let's say that now my bank account has jumped to $1,000 and this one has gone down to $200. We'll remove the message that we left here the previous month just so we can know why it changed. Go over to the non-liquid assets and let's say that our house is now worth $201,000 and we've added $500 to our 401k. So now our total non-liquid assets is $202,500. And debt, we've been using the debt snowball or the debt avalanche to pay the debt down as quickly as possible. And we've paid down our credit card to $0. And we've also been able to take our car loan down to $4,500. So we're going to come over to net worth history now and put in these updated numbers. So now our current assets in the last month has gone from $201,350 to $203,700. And then $5,500 for the total debt, and the current total net worth is $198,200. And now you see that we have in the green here the rate of gain of loss is $3,050. That means that my net worth has increased $3,050 since the previous month. So this is the net worth calculator that we've been using for the last 2 years, and it's been really exciting. I actually look forward to doing this every single month because it just gives us the encouragement to keep on growing and also to realize where we can have room for improvement so we can continue to increase our rate of gain for our net worth every month. So we hope that you guys have enjoyed this video and that you've learned everything that you need to know to calculate your own net worth. One thing that we want to re-emphasize again is that while your net worth can technically be calculated at any time, we recommend that you calculate your net worth at least twice a year, but ideally once a month. Go in and calculate your net worth. But with that being said, I think that's everything we were going to cover in this video. If you like this video, please smash the like button for us. It really helps us out and gets the YouTube algorithm to like us, so our video gets shared with more people. Also, if you're interested in our content and our future content, hit the subscribe button for us and also the notification bell. And we'll see you guys next time.
See you guys.